This is the ES4 Renko on 3/7/2012. I had a trader ask me a very astute question yesterday, and he said, do you open up the 4 Renko and the 2 Renko and look at them and then decide what you're going to trade? And the answer to that is yes. Now, this is the 4 Renko right here, and in 6 hours, right in here, there was about 12 or 13 bars put in, which is only 2 bars per hour, so it's not a lot of activity. Plus, this is yesterday's close right here, and it ended up pretty much right back where yesterday's close occurred. So you have to have a certain amount of range in order to trade for Renko, and lately the market has had not much range, so it's been difficult to trade the 4 Renko. So when I see something like this, I go to the 2 Renko and decide that it looks like it'll be the 2 Renko for today. Now here's a 2-point trade this morning on the 2 Renko. I entered the trade right here as the swing cycle crossed below the variable band, and the squeeze ended right there on the bar before. Everything was screaming to go short here. All the indicators were pointing down, and the Bollinger Band differential oscillator was just crossing below its zero line here. So I got out of the trade right here when it hit support at yesterday's close, and I'll show you in a minute why I like to plot yesterday's close on the chart. Now, there's a divergence here once again with the RWO. You can see its low point was right here, and the low point in the equities was here, but the RWO had moved up. Also, the DIX was moving up right here, and its low point was here, and so it was showing a divergence as well. So I thought this was a good time to take my 2 points and get out of this trade. This is a screenshot of the ES2 Renko and what happened after I got out of the trade, which was right here. And I put the Fibonacci retracements in, and I drew them from the base of this triangle down to the support line right here of yesterday's close. And the equity came, bounced off yesterday's close here, came down, bounced off here, and then here and here. So it had a great deal of trouble getting through this support right in here. But I wanted to point out a technique that some traders use. I don't personally use it, but I could, and that is trading on 4 of the indicators here, and that would be the triangle pain indicator, the swing cycle VB, the binary triangle, and the DIX. Now, this is just short-term trades in here, and the DIX is particularly good for short-term trades. And the idea is the swing cycle already moved up here and was green, which indicates there was going to be an up move here. And so you could ignore the other indicators if you wanted to trade this way and just go by the DIX, which should turn green right before it goes inside the binary triangle, and the binary triangle shows an up triangle right here. So you could get in this trade probably right here and get out here maybe for half a point or 3/4 of a point. You wouldn't go short here because the swing cycle is green moving down here. Here's another trade that could have been taken using this technique. When the swing cycle turns red, crosses below the variable band right here, you could have gone short here and then got out when it hits support at yesterday's close. And you can see here how the DIX turned red just slightly before it crossed into the binary triangle zone here, and it shows a down triangle right here. So again, it could have been less than a point profit on this trade as well. I have to shut down things early today because I have an appointment with my accountant, and I have the same uneasy feeling when I have an appointment with the accountant is the same as when I have an appointment with my dentist. Not something I look forward to. So that'll be it for the day, and we'll see if we can do this again tomorrow.